It's hard to tell if banks in Nigeria didn't see this coming. They're now adjusting to the reality of the new measures, which analysts say would see an estimated 500 billion naira, or just about $3 billion of their deposits, mopped up and sterilized at 0% interest rates, thanks to the new 20% cash reserve ratio on private sector funds announced by Central Bank Chief Godwin Emefiele. With the cash reserve ratio for public sector funds now at 75%, fears arise that banks' profitability could fall significantly with a likely sell-off in bank stocks.
So it is a desire to stabilize the macroeconomy, but it is penalizing the banks in terms of reducing their space, their room to be able to invest the funds that are in their custody.
Local investors have always borrowed at very high interest rates. The new measures will only make the situation tougher, as the CBN has also raised official rates from 12% to 13%.
If the banks don't have sufficient funds to lend, it will affect their capacity to support investment. And if they don't have sufficient funds to lend, it could also affect interest rates, because the forces of demand and supply will now come into play.
Analysts say the devaluation of the Naira would certainly trigger inflation, warning that with falling oil prices, stiffer measures may still be taken by the central bank to defend the local currency and shore up reserves.
The prices of general goods which are in the market would go up. CKD components also, companies which have been encouraged to set up industries here based on their own cost calculation on an exchange rate of 155 would immediately find that they have to increase their prices.
So at a time now when the challenge of stabilizing the macroeconomy is even higher and tougher now, because to the extent that we are having the kind of trend we are having with oil prices, the CBN will feel even more challenged to make sure that exchange rate is stabilized and foreign reserves are preserved.
It's still not very certain how long these new measures will hold out for and keep the Naira stable, but the CBN has made it quite clear that it would not hesitate to tighten further if things don't improve. And that, of course, would not be pleasant news for the country's banking industry. Deji, Badmus, CCTV, Lagos, Nigeria.